Today, we dive into a groundbreaking AI breakthrough alongside major updates in the tech sector and the ongoing impacts of a significant data breach. Stay tuned as we explore these critical stories shaping our world. Here are today's top 10 stories you need to know. A significant breakthrough in artificial intelligence was announced today, May 1st, 2026. Ambiq, a leader in ultra-low power semiconductor solutions, unveiled its latest technology, Compression Kit. This next-generation AI-based codec promises to reduce memory and power consumption for edge devices by an impressive 20 times. The demand for efficient data processing has surged, driven by the rapid growth of AI applications across multiple sectors, including healthcare, smart homes, and industrial automation. Prior to this innovation, devices struggled with the massive data generated by continuous sensors, leading to high operational costs and inefficiencies that hindered widespread adoption. The introduction of Compression Kit could drastically lower these barriers, making it feasible for more companies to integrate AI into their products without incurring prohibitive expenses. As industries begin to adopt this transformative technology, we can expect a significant surge in the development of wearable devices and smart technologies that leverage enhanced capabilities for real-time data processing. This innovation not only positions Ambiq at the forefront of energy-efficient AI solutions, but also sets a new industry standard that could compel competitors to innovate rapidly. Looking ahead, the implications of Compression Kit may well reshape the landscape of AI, paving the way for more sustainable and efficient technologies in the coming years. On April 30th, 2026, major tech companies reported their earnings, demonstrating resilience and growth, largely attributed to the booming AI sector. Microsoft, Alphabet, Meta Platforms, and Amazon all showcased impressive financial results, driven by their investments in AI technologies. The rapid integration of AI into various products has transformed how businesses operate, significantly enhancing productivity and efficiency. Analysts noted that the proliferation of AI tools has significantly boosted these companies' cloud services and advertising revenues, with AI-driven analytics becoming crucial for targeted marketing. Despite the overall positive earnings reports, some investors expressed concern about rising costs associated with AI development. For instance, Meta's stock slid following its revenue announcement due to increased expenditure on AI infrastructure and talent acquisition. In contrast, Alphabet's stock climbed 6% in pre-market trading, reflecting strong demand for its cloud computing services fueled by AI applications. As the tech industry continues to evolve, the integration of AI will likely remain a key factor influencing investor sentiment. Looking ahead, these companies are expected to further innovate and expand their AI capabilities, with plans to enhance user experiences and optimize operational efficiencies, setting the stage for sustained future growth in a competitive landscape. Fidelity Brokerage Services has been fined $1.25 million following a significant data breach that compromised the personal information of approximately 77,000 customers. This breach, which exposed sensitive data, prompted an investigation by Massachusetts' top securities regulator, William Galvin. The investigation revealed that Fidelity had vulnerabilities in its cybersecurity infrastructure. As a result, the regulator mandated Fidelity to enhance its cybersecurity measures and hire an independent consultant to conduct a thorough assessment of their systems. While Fidelity acted promptly to notify the affected customers, it was noted that they neglected to inform beneficiaries whose information was also compromised, raising concerns about their communication protocols. This incident underscores the critical importance of cybersecurity in today's digital landscape, where data breaches can have devastating effects on both companies and individuals alike. As regulations around data protection become more stringent, financial institutions will increasingly need to prioritize their cybersecurity protocols. Looking ahead, the financial sector must invest in advanced technologies and training to fortify defenses against cyber threats, ensuring that customer trust is maintained in an era marked by increasing digital vulnerabilities. Following the earnings reports from major tech companies, stock futures in the U.S. edged higher on the morning of April 30th, 2026. The Dow Jones Industrial Average, S&P 500, and Nasdaq all saw positive movement as investors reacted favorably to the financial results. The tech sector in particular was highlighted for its robust performance, with companies like Microsoft and Alphabet driving growth, showcasing strong demand and innovation. This positive sentiment reflects a broader trend of resilience in the tech industry, which has rebounded from previous market volatility. However, this optimism was tempered by rising oil prices, which have caused some fluctuations in the market and raised concerns about inflation. Analysts suggest that while tech earnings provide a strong foundation, external factors such as energy prices could influence market stability in the coming weeks. Investors will be keeping a close eye on how these trends develop, particularly with Apple set to report its earnings later today. As the financial landscape continues to shift, the focus will be on balancing growth against rising costs. In a significant boost for the startup ecosystem, venture capital firm 137 Ventures announced the successful raising of over $700 million across 2 new growth stage funds. This funding is aimed at supporting startups with the potential for substantial market impact, particularly in sectors like artificial intelligence and defense. Founded by former Founders Fund investor Justin Fishner-Wolfson, 137 Ventures has a track record of investing in innovative companies, including those in AI and industrial systems. The firm has already deployed more than $1 billion into various ventures over the past year, indicating a strong belief in the potential of emerging technologies. The infusion of capital is expected to catalyze growth and innovation, particularly as the demand for AI solutions continues to expand. As these startups receive funding, we can anticipate new advancements and products entering the market that could reshape industries. Looking ahead, the ongoing investment in technology will likely drive further developments in AI and related fields. Meta Platforms experienced a notable drop in stock value despite announcing its fastest revenue growth since 2021. The company's latest earnings report revealed a substantial increase in revenue, largely attributed to its aggressive investments in artificial intelligence technologies. These advancements have positioned Meta to enhance user engagement and streamline operations. However, the escalating costs associated with these AI developments raised concerns among investors, prompting fears of diminishing profit margins. The market reacted negatively, leading to a decline in Meta's stock price following the announcement. This situation underscores the challenges tech companies face as they strive to balance growth with the financial burdens of innovation. Moreover, the tech sector is witnessing increased scrutiny over spending, making it imperative for companies to demonstrate fiscal responsibility. As Meta navigates this complex landscape, it will be crucial for the company to manage these expenses effectively. In the coming months, investors will be keenly focused on how Meta plans to leverage its AI capabilities while ensuring sustainable profitability. Following a significant data breach incident involving ADT Inc., a national class action firm has launched an investigation into the exposure of personal information. This breach has raised serious alarms regarding the cybersecurity practices employed by the company, prompting widespread concern among consumers about the safety of their sensitive data. ADT Inc., a major player in home security, is now facing intense scrutiny from regulators and stakeholders who demand clarity on how such a critical lapse occurred. In recent years, data breaches have become increasingly prevalent, highlighting the vulnerabilities that many organizations face. The impact of this incident extends beyond immediate financial repercussions. It threatens the trust that customers place in ADT and similar companies. As the investigation unfolds, it underscores the urgent need for businesses to bolster their cybersecurity measures. Moving forward, ADT Inc. must not only provide transparent answers, but also implement robust security protocols to restore consumer confidence and prevent future breaches from occurring. Global oil prices have experienced significant fluctuations following recent geopolitical developments and shifting investor sentiment. Reports emerged of a potential military intervention concerning Iran, prompting an initial surge in oil prices as traders reacted to fears of supply disruptions. Historically, tensions in the Middle East have led to volatility in oil markets, given the region's critical role in global oil production. This time, analysts highlight concerns that prolonged uncertainty could exacerbate inflationary pressures worldwide, affecting consumers and businesses alike. Furthermore, the potential for increased energy prices could hinder economic recovery in many nations still grappling with the aftermath of the pandemic. As countries navigate these complexities, the energy sector will be under close scrutiny for any shifts that could destabilize markets. Looking ahead, the focus will be on how ongoing geopolitical tensions influence oil supply dynamics and their broader implications for global economic resilience in the coming months. The geopolitical landscape in Iran remains tense as the government considers new military options to address ongoing conflicts with external and internal adversaries. This escalation comes amid a backdrop of long-standing sanctions and economic struggles, which have intensified public discontent and protests within the nation. The international community is closely monitoring these developments, particularly as they could significantly impact regional stability and global oil markets, which are already vulnerable to fluctuations. Analysts warn that any military escalation could exacerbate existing tensions, potentially igniting broader conflicts involving neighboring countries. With diplomatic efforts continuing alongside military considerations, the coming weeks are critical in determining the trajectory of these tensions. Countries are likely to engage in complex negotiations, striving for diplomatic resolutions that prioritize peace and stability, while carefully weighing the consequences of any military actions that could further destabilize the region. The technology sector is abuzz with discussions surrounding upcoming initial public offerings, or IPOs. Investors are particularly focused on high-quality products that are expected to enter the market soon. Analysts note that there is a strong pipeline of tech IPOs, which could invigorate the market. Companies are preparing to launch their IPOs, and investor interest is increasing as the tech landscape continues to evolve. As these companies prepare for their public debuts, market participants are keen to see how these new offerings will be received. The anticipation surrounding these IPOs reflects the ongoing confidence in the tech sector's potential for growth. In the coming months, the market will likely experience heightened activity as these tech companies make their moves. Thank you for joining us today. Which story shocked you the most? Don't forget to like and subscribe for more updates.